Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news for January 19th. Let's get started with the charts. Um, so we really hit kind of a peak here later last week when we were pushing up against 103. If you saw that report, one of the things I kind of warned about is that we could hit that top, bounce off, and jump down. Unfortunately, that's what we saw. But we didn't really lose a whole lot of ground over the last couple sessions after that. But it was Yellen's speech yesterday that came out, and we saw some pretty heavy bond movement yesterday late in the afternoon. We saw bonds really come down and sell off. We opened a little bit weaker this morning, just a little bit worse than that. We have a mixed news report. So here's where we're at. We're at 101.94 this morning. Our support's coming in below us at about 101.50, this green line here. Our resistance is up above us at about 102.75. We haven't necessarily developed a downward trading channel yet, so it's not worth worrying. But we are back from an upward trading channel into a neutral or a flat trading channel. So it's important to be a little careful here because you know what? Usually, if we have an upward or a good trading channel and we go to a flat trading channel, the next thing that could come could be a downward trading channel, like we saw here post-election and Fed. So just be a little careful right now. We are trading right around the middle of our trading range. So this is because housing stats came out, jobless claims came out, both better than expected. It definitely helped the economy. Not so good for bonds, though. Philly Fed looks like it may have helped us a bit. And as far as the news, it was really yesterday, Yellen in the Beige Book. Some of the repercussions of that really we saw that fast sell-off yesterday afternoon, as you can see here on the charts. So to kind of quantify where we're at, Freddie Mac reported that in December, the average consumer received a rate of 4.2% and paid a half a point for that rate. So here's what we're seeing. If the average trading last month was about 102.25 and we're currently trading at 101.94, well, we're off by about 31 basis points. What that means is if the average consumer is paying half of a point, they may be paying closer to 3/4 or 7/8 of a point. Based on today's standards. So anyway, just kind of be careful about that where we're trading. Here's your forecast. Analysts are pretty consistent. They're going bearish on the short term, so they think the next 1 to 2 days we could see continue to see some sell-off. That's why I'm calling for a range forecast of 101.50. We could actually go down and touch that. On the higher end, I'm also calling for about 102.75. So as you can see, we're right in the middle of that trading range. So it could go either way, but the analysts are a little bit more bearish on the short term. So if you have a loan in progress, you actually may, if you want to play it safe, you may actually want to consider locking in. If you have a little bit of time to kind of watch the market and see what happens with this flat neutral trading pattern, then just proceed cautiously. That would probably be the fairest opinions out there. So anyway, that's it for now. Would love to hear from you at the top left. If it's your first time on the channel, you can click back to subscribe. That'll just give you a little update on whenever we record a new video and get new news out there. So you can always unsubscribe. So it's pretty easy going. At the top right, you'll actually see a link for Mortgage Bonds 101. Mortgage Bonds 101, it's just a quick video that kind of teach you how these charts and this bond trading impacts you as a consumer getting a mortgage. And of course, don't forget, we'd love to hear from you. Leave your comments down below. Let us know what you think, and everything likes to be liked. So does this video. Anyway, that's it for now. We'll see you next week. Have a great weekend. Stay dry out there. Bye-bye.